Emmbi Industries. Does low valuation and future prospects make it a good buy? Things are looking up for Emmbi Industries, one of the leading players in the field of woven polyethylene and polypropylene products, as the management raised its guidance and outlook for 2021. Emmbi had delivered a muted performance in the first 9 months of FY21 as operations in both Q1 and Q2 were disrupted heavily due to labor issues and poor market offtake. But for the December quarter, the pace of contraction narrowed owing to pickup in manufacturing activity, and the order book also strengthened. The operating margin stabilized and capacity utilization touched 70 to 75%. Now let's talk about financial performance. Revenue declined by almost 8 crore rupees with a year-on-year drop of 10%, while profit after tax decreased by 35%. But December quarter saw some improvement as the revenue decline for the first 9 months was 21%, whereas the profit after tax fell by 58% on a year-on-year basis. Currently, the company is sitting on an order book of 8 to 9 weeks. The domestic packaging business has been muted in comparison, but the pickup in the autos, FMCG and pharma sectors is aiding demand recovery. Further, spike in crude oil prices and richer product mix should translate into better realizations and margins. On the domestic front, Emmbi is focusing on expanding its presence in rural market through retail channels, expansion and benefits from PLI scheme. To broaden the portfolio, the company has diversified its product range into smaller ticket items such as Murkha's bags and mulch films. Additionally, the company is also looking to enter newer states such as Telangana, Andhra Pradesh, Punjab and Haryana, which presents huge opportunities for growth on the agricultural side. Given the initiatives being undertaken, the management expects the retail vertical to grow by 20 to 25% in the coming fiscal year. The Textile Ministry is working on a structure to roll out PLI scheme for technical textiles and man-made fiber. The initial corpus of manufacturing incentives is pegged at 10,000 crore rupees, which is spread over a period of 5 years. Though the final print of the policy is yet to come out, in all likelihood, the rollout of PLI could boost the growth prospects of Emmbi as some of its products fall under the technical textile category. Valuation and stock recommendation. Despite an optimistic management and better numbers improving with each quarter, Emmbi Industries does have some risk factors in terms of volatility in prices of oil and further lockdowns slowing down the economy. But if the market conditions remain stable, Emmbi's investment in new projects will yield returns for shareholders in medium to long run. The company's pond liner business is also expected to grow in FY22. The combination of appealing valuations, that is 8 times FY22 estimated earnings, and steady growth prospects makes a compelling case for considering Emmbi in the long-term portfolio.